Hi there, my fellow wealth creators. In this video, we're going to be talking about putting your money to work. How do you give your money a job that it enjoys doing and does so diligently and continuously? My name is Weide-Market, and I am the Chief Wealth Coach at Weide-Market. Weide-Market exists to educate and consult with people to create individual wealth building plans. Weide-Market is built in the idea that genuine wealth is more than just the abundance of money, and that genuine wealth is so much more exciting than just having lots of money. So if this is something that interests you, please hit the like button on this video so that the YouTube algorithm can share this to more and wider audience. More people need to know and understand the flow of money and how to put money to work. I promise you will find value from this video and others like it on this channel. The first thing you need to know is that banks aren't storage facilities for money. Banks are designed to administrate and handle transactions of money. But the banks themselves don't even store money in the banks. Once you give them your money, they give that money away to investment companies or property developers and those kind of things to build malls and high-rise buildings and stuff like that with, so that they can get returns on your money. And then they give you a measly 3 to 7% per annum on your money. Robert Kiyosaki, the author of Rich Dad Poor Dad and other books, say that the rich don't work for money. I also recently heard him say that the harder you work for money, the more taxes you pay. So how does the ordinary person create a way or create a job or give their money a job? Well, let's first look at the book called The Richest Man in Babylon, where they talk about the 7 cures for a lean purse. Cure number 1 is to start small by fattening your wallet, which means to only spend 90% of everything that you earn. The 10% is you have to keep, in other words, to start fattening your wallet. Cure number 2 is to control your expenses. You cannot increase your wealth by frivolously spending all your income. The third rule is to make your money multiply, and this is the basis and the idea behind this video. You can put this 10% that you keep for yourself in high yield savings accounts or in compound interest accounts as you save to invest. Rule number 4 is to guard against losses. Rule number 5 is to make your home an asset. Rule number 6 is to ensure future income, and rule number 7 is to increase your income capacity. Let's just discuss rule number 7 for a second. This is an indirect job for your money. Use the income that you do get to increase your income capacity and increase your value in the market that you work. This means that you will be able to earn more money and be able to put more money away for your investments. Next, let's look at the 5 laws of gold or money from The Richest Man of Babylon. Law number 1 is that money comes gladly and increasingly to the person who saves to invest. In other words, that 10% that you keep for yourself, the more you do that and the more diligently you do that, the more easily money will come to you. Law number 2 of money is that money will work diligently and contentedly for the wise owner who gives it profitable employment. In other words, this is like taking a seed, that little bit of seed that you do have, and planting it in the ground and waiting and nurturing this seed to grow into a plant. Once this plant has grown, you will be able to harvest more seeds from that plant and reinvest your money. In other words, replant those seeds that you get from the original plant, and in that way you can get fruit again from multiple plants and get more seeds from those plants, which you again reinvest. Law number 3 is that money will stay and protect you if you follow wise counsel. I like this saying that eagles don't learn to fly from chickens. In other words, if you want to learn how to work with money, get counsel from the people who understand how money works, who understands how to produce income generating assets. Law number four, the law number 4 of gold or money is that will slip away if you trust in your own misunderstanding and your own misinformation. In other words, investing in something you don't understand. And law number 5 is that money will run away or flee away from you if you force it to produce impossible returns. In other words, when you fall for scams and listen to every person who wants to give you advice about how you spend your money. This channel is not about telling you how you spend your money, but rather teaching you how to learn about money. In other words, the proverbial teaching you how to fish instead of giving you fish. So let's get back to the question of how does an average person put their money to work? Well, you need to answer one important question. Does my investment produce income? In other words, does my investment pay me? And there are 3 ways that you judge the answer to that question. The first is, does my investment have equity? In other words, does it have some sweat equity, a system in place, people working for you or working for that system that produce activities that produce income? Or does it have equity? In other words, actual physical property or an actual physical business? The second thing or second factor you need to take into consideration is, does it have cash flow? In other words, is there cash flow availability to do transactions with and eventually pay me the dividends that I want? And then the third factor is, does it have growth? So does it grow from my initial investment so that I have an exit strategy where I can get more money out than what I put in? This brings me to the point I made earlier about educating yourself and gaining knowledge and understanding and increasing your income capacity, your income generating capacity. This book, The Wealth Chef by Ann Wilson, is a book that I read and made a world of difference in my life in understanding the flow of money. The flow of money works like this. You have an income statement which gives you a breakdown of your income and your expenses, and you have a balance sheet that gives you a breakdown of your assets and your liabilities. In other words, your net worth. Then you have a job or a business or small business or some kind of income that comes into your life. What do you do with that income? Do you just give that money to your expenses and then make it flow out of your life? Or do you keep some of that money for yourself to build assets? And then once your assets start generating income, what do you do with that income? Do you use that to buy liabilities and generate more expenses so that money can flow out of your life? Or do you reinvest that like we did with the planting the extra seeds from the original plant that you planted, so that can generate more income? And then once that asset start generating sustainable income, then you can buy the liabilities and generate the expenses from the income that you get from your assets rather than your main income. In other words, selling your time for money. What are the different asset classes? And this is really what the core of this video is all about. If you've watched this far, please remember to give this video a like and subscribe to this channel. Hit the bell for notifications while you're at it. Different asset classes produce different types of income or different types of growth and consist of different types of equity. It is really up to you to do your own research and find out what are the things that you want to invest in, why that is, and at what price do you invest. If you go for something like REITs or real estate investment trusts, then you invest in property on the stock market. So the rates typically pay dividends on a quarterly basis, and you can exit by selling those rates into the market again. Easy Properties is a way that I am targeting more and more to invest in developments in South Africa. Property developments with Easy Properties works in a very interesting way and works very similar to rates. If you want to know more, I suggest you check out this video, which I've done in the past, specifically about how you can diversify your investment portfolio via Easy Properties. Another way that you can put your money to work is in asset classes like stock market, publicly listed companies that are dividend yielding investments, or ETFs that are dividend yielding. In other words, you get paid on a quarterly basis from the ETFs and the companies that you are invested in. Once again, there is always risk in putting your money to work, but you need to do your own research. And if you want to know more about doing your own research, I'll share a video at the end of this video so that you can find out more about investing in the stock market. The next thing you can invest in is private equity. Private equity means that you invest in a startup company or a company that has an idea that you believe will produce growth, has the cash flow to pay you dividends, and has the equity available to support these growth and cash flow needs that you have. Make sure that you put legal contracts in place, whether you invest with a friend or with someone that was referred to you. Always make sure that you cover your exit strategy and that exit strategy is clear for both you and the person you are investing in, because you only make money once you take that money out. There needs to be growth from what money you put in to what money you get out of it. The next thing you can do is buy an investment property. There are certain advantages and disadvantages for each of these asset classes, but buying a property for me is not a viable option at this stage, because for me, I'm trying to get rid of the debt that I've made in the past. So for buying a property, you either need to save that money, which would cost you somewhere between 500,000 and 1.5 million rand, or you need to borrow that money from the bank, and that carries inherent risk by itself. The advantage is that once that property is paid off, you own that property. The disadvantage is that you are responsible for upkeep and maintaining of that property. The other thing you could do is build an asset or a business from scratch. Start a sideline hustle, develop that sideline into a viable business, and keep in mind that you are building an asset, so you need to do all your paperwork and all of these kind of things, the structures in the business and all of that, so that when you want to approach an investor or you want to sell that to a potential investor in the future, you can show them what the business does and the processes in the business that are not dependent on you. So how much money do you actually need to put away to be able to earn a certain amount of money? Well, let's say, for example, you want to earn 50,000 Rand a month from your assets. That means that your assets need to produce 600,000 Rand a year. Let's say roughly you extract 8% per annum of your investment. So that doesn't mean that your assets only produce 8% of profit a year, but you only want to extract 8% per annum from your assets, so that asset has money to reinvest in the asset itself. So let's say 8% yield per year from your assets. So that means for a 600,000 Rand income from income producing asset per annum, you need to be able to have 7.5 million Rand asset in that asset to be able to produce a sustainable income of 8% per annum from that. So this is just a guideline, and I suggest you work this out for yourself and decide how much you have to be able to invest and how much your asset need to be worth to reach the goals that you have for the income that you are expecting. Remember to check out this video on doing your own research for investing in the stock market. Cheers, take care, and be blessed. I'll catch you on the flip side.